My name's Dave DeBow, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewsyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content.
All right, guys, welcome to Property Profits Podcast. I'm your host, Bryce Kaminsky, filling in for Dave DeBow. And have you ever wondered how faith and fear play into your investment decisions? Well, today, my guest, Logan Bowers from Lafayette, Louisiana, he's here to shed some light on this topic. With over 150 doors in his portfolio, Logan has navigated the world of real estate investing with a focus on raising capital and partnering with syndicators. Logan, welcome to the show. Great to have you here.
Hey, thank you so much for having me, Bryce. That was a great runway. Great intro there.
Hey man, ChatGPT and me are best friends. So, you gotta have help in this business when you're processing things. But nevertheless, very true. And the big question, obviously you didn't start with 150 doors. You didn't start as a syndicating partner. Where did you get your start? What got you excited, interested in the idea? Was it a book, a seminar, a late night television show? What was it?
Yeah, man. Great question. That's so funny. Late night television show. I remember when they used to have the real estate infomercials.
It'd come with the tapes.
Yeah, the disc,
a binder. Yeah, even before CDs, they'd be like those push-in tapes. They'd all be in that plastic mold. You can still find those at the thrift store. So how did you get your start?
Yeah, so I got started actually from he was my manager at the time, but he was also became a really good friend over the course of several years. And he was actually the person that kind of led me to Christ and it really started asking me some questions about my beliefs. He was also asking me questions about like my retirement and what I was going to do and if I was interested in investing. And I kind of always talked about starting businesses. Both of my grandparents owned businesses. Neither my mom or dad didn't, but my grandparents owned businesses. And so he kind of started like asking me the questions. And then he gave me the book, Rich Dad, Poor Dad in April of 2016. Read that book. And I was like, I realized I had no assets at the time. Everything that I thought was an asset was a liability. And so I was on this tear to buy assets. And then literally 1 month after that, we found out we were pregnant with our first child. And then a week after that, me and him both lost our jobs in the oil field. We were in the oil field, both lost our jobs on the same day. So we kind of sat around and felt sorry for ourselves for a few weeks. And then I called him up one day and I was sitting in my boxers watching ESPN First Take, filling out job applications to go back to work for Halliburton, who I'd worked for before.
Yeah.
To do the same job that I was miserable doing. And I just had like this aha moment of like, this is the definition of insanity. Like I'm trying to get back in the boat that I hated the whole time. Like I called him up and was like, his name's Brandon. I was like, hey, Brandon, like, I don't know what this looks like, but let's do this real estate thing. And so from there, we started a company and started buying some flip houses. So we flipped houses, single family houses, and then we would take the cash from those and buy low income rentals. And so that we kind of built that portfolio up to about 22 doors, a couple quadplexes in there also. And then he eventually wanted to get out. He went back into the oil field and we sold that portfolio down to a couple doors. And then in 2020, I really started pushing into the multifamily space and started building again from there, kind of as a solo, bringing in capital partners, but it's solo GP on deals in 2020.
Yeah, it's interesting when you're saying about applying for the job you hated. There's a quote that I really love, because when you're an entrepreneur, things are like failing all the time. And like a man without a plan for the future returns to his past. So it's like, if you fail to plan, you end up kind of just looking back at cars you used to have, relationships you used to be in, jobs you used to have. It's like, oh, safe. I could go back and, put more drills in the ground and be a rigger again. But you kind of defy the odds. You say, you know what? I wasn't happy with that in the first place. I'm going to continue pursuing this, even if it, isn't exactly what I think will work, but at least it's better than, I already know what that is. Like I've already done that. So I know 100% what that's going to be like. Transitioning from those Burr deals into raising capital in 2020 for syndication, did you find that it was much different than raising capital for individual multifamily, like twos and threes and stuff like that?
That's a great question. I think that it's one of the things that I probably take for granted is my ability to build relationship and trust with people. And so it's something that's always come fairly easy to me. So the transition, I would say, wasn't very different. The probably the biggest thing in that transition was the type of person that I was talking to.
Mm,
The profile of the person changed a little bit. I started to get into some of the higher net worth people that were more familiar with investments. And so the language is a little bit easier because I tend to gravitate towards that more sophisticated side of
mhm,
investing and the more
mhm,
sophisticated language. So they started talking about performance, and like when we would have these conversations, they didn't know real estate specifically, but like they were familiar with all the terms and the modeling. And so it was a little bit different person that I was talking to, but at the end of the day, everyone's the same. Help them understand the risk of what they're getting into. And if they can understand the risk, then they can listen to the potential returns. And so I find that it's very similar for, mom and pop that have some money underneath their mattress, or a super sophisticated business guys. Like if you can clearly help them understand what the risks are in this specific deal, and then what the returns are, like that's the proper path to get somebody to say yes to investing in a deal.
yeah, because a lot of times we might not display the risks, um, not because we're not necessarily like, oh, we want to hide the risks. It's just that a lot of investors, when they start raising capital, are more excited about the returns. And so,
Yeah.
like, you can talk returns all day, but what about, as my lawyer always says, he's always like, what if it doesn't go right, Bryce? What happens if this deal that you're making, this crazy deal, what if they don't adhere to this paperwork? You have nothing in here on the no side.
Yep.
So, yeah, balancing risk and reward and presenting the whole thing, I think will definitely increase your odds. So let's talk about this a little bit more. What led you to incorporate faith into your investment philosophy?
So I think it's really interesting that, they have so many parallels. I gave my life to Christ in December 2015. So I was right in that time period as I was coming to know Jesus and on fire for, like learning about Christ and also getting into investing. But faith is the hope. The Bible says that faith is the essence of the things hoped for that you have not received, right? So it is you're acting as if you already have the thing before you have it. You're doing the activities, you're searching for a deal before you've ever bought a deal. Maybe if it's your first deal you're going to buy, you're doing all the activities as if you knew that the outcome was certain, even though you probably don't feel like that. That is what faith is. Faith is stepping into the unknown. And as an investor, like we can quantify a lot of things. We can
Hmm.
we can build all the spreadsheets and all the things, but at the end of the day, every single investment, every single business venture, it takes a leap of faith. It takes you stepping into a place of, I've done a sufficient amount of due diligence, but you still have to make the leap. And faith in Christ and faith in investing is the same in that. Is like you're not always going to know the next 10 steps, even though that's what we want. We want to know a clear path and all the we remove all the risk. But the truth is, like, we just need to have enough information to make the next best step. Right. And if we focus on making what is the next best step I can make today, or in this deal, or in this next opportunity, like that's how you win. You just take a bunch of next best steps instead of the people that try to plan it out 50 steps in advance. One, they probably are never going to get started. And
Yeah,
secondly, if they do, when those steps starts changing, because they will,
the
because
whole
deals
plan
never go
goes
as
out the
planned,
window. Yeah.
right? Like then now they're stuck and they feel like, oh my God, it's not going like a plan. It's like, well, you had a poor expectation that it was going to. I've never had a deal go as planned. I've had a lot go
Yeah.
better. I've had some go worse, but I've never had any of them go exactly to the performance, you know?
Yeah, rarely does it go. I would do this experiment always with my students when I was talking about the due diligence process, and I'd say, okay, take a pencil, draw a box, a little square on a piece of paper. And I said, okay, this is due diligence in a nutshell. Try to fill that thing in with the pencil. Just shade it. Is it completely filled in? And they would leave some gaps. I'm like, okay, try working on it a little bit more. Okay. Is it looks completely like a solid black square? Okay, look really close. There's still always going to be gaps in that thing, and it's never going to be. So, get it as like as gray as you feel is full. Take action, because it's
That's
never
good.
going to be enough due diligence. You could do due diligence until you die and never do a deal. So, what are some specific instances where your faith influenced a major investment decision?
Yeah. So this was a point that was the first multifamily deal that I did was a 55 unit mobile home park. And I say multifamily, anything bigger than 4 units. I consider under 4 units, a small multi is like, I treat it like single family. It's appraised like single family. So I'm talking about, anything over 5 units. And this was,
Yeah,
I went from 4 to 55 was the jump, right? My biggest
yeah.
deal had been 4 units, did a 55 unit deal. And in that, I felt very strongly that I was supposed to be doing multifamily investing. And so I just prayed about it. I felt like I had confirmation. And so I went back and, back into the real world. Like this is a time where I was taking off when my third child was born, my daughter. And I had some margin. I had stepped away from I'm a licensed agent as well. So I was running a large sales team at the time and also buying investments. And I stepped away for 2 weeks. I had offloaded all my responsibilities and I was just kind of had time to think and process. And I was like, man, I'm making a lot of money as an agent, but I'm kind of in the rat race here again, just with no income ceiling, right? It's like I was not in control of my time. I was making a lot of money, but I was working a ton. And I'm like, this is not
You
really
you
what
kind
I
of
signed
bought a
up for when
job.
I got into real estate.
Yeah, you
Yeah.
bought a job, right?
Yeah. Yeah. And so I had some, revelation there. And I was like, all right, multifamily. I feel like this is where God is calling me. Well, I went back into the rat race and I was like, I had a decision to make. And I remember like kind of being angry and was like, hey, God, like, what, like, you told me to go this way. I'm going this way. Like, what is happening here? I was like, make this clear to me because I am dumb. Like, I need a very clear sign. And literally 2 hours later, I got a call from or a text from my friend who had been telling me about this mobile home park that his in-laws owned. And he's like, hey, they're ready to sell. And I'm like, all right, I got you, God. And then I literally went to the bank and I had no idea at the time where I was going to get the down payment for the deal. And I went negotiated with them and I put it under contract with, I hadn't talked to the bank yet. And I also had no private lender lined up. I
Sounds
had some
like
people
real
that were in
estate.
the hopper, but like I literally like, I don't even know if the bank's going to give me a loan for this. This is more money than I've ever borrowed in one deal. I don't know if I'm going to better get the raise the money. And, within a week, all that stuff was ironed out, but I put it under contract without any of that stuff in place. So that was the spot where like, I felt like I was being led in that direction. I very clearly prayed. Not often doesn't happen that way, but 2 hours later, I get a text of confirmation. And then like literally like 10 days later, I was under contract for this deal that had no idea how I was going to fund. And 45 days later, I was closing on it.
Yeah, sounds like real estate. I went and wrote an offer and I had no idea what I was going to do, but I knew that this was the right direction. And yeah,
Yeah,
it's
it was a
crazy
deal.
that,
It really was. It was a solid deal. Like I bought it for 1.2 million and it appraised for 1.42 day one. And the lot rents were $80 below market. Like it was just slam dunk, like really, really super solid fundamental deal. And so I just knew that there was value there, you know?
yeah, there's that section, something like knocking at the door. Because sometimes I feel like we ask for whatever and we're not listening, like God or whatever, God's giving you the answers and you're just like, I don't not listening. So you could have taken that sign as like, oh yeah, okay, it's just business. However, it led you down this road. So since then, what sort of um, like how do you balance that profitability and aligning your values and faith when you're doing these ongoing businesses now that you've said, okay, this is where I'm supposed to be?
Yeah, I think for me, it's always a posture of giving. Like, giving breaks that cycle of greediness that we need more, like we don't have enough, that like when we give, like, um, there's a quote that I love, and I don't even know who said it. I'm sure you may know, but that that money you don't love if you don't love money, it's because you haven't given enough away yet,
Hmm.
right? It's like that like that posture of like always giving and making it a practice to give and give joyfully is a way that you never you stay away from that, like that hoarding mentality of like there's not enough out of scarcity. When you, that act of giving is a way that I continue to, every time I'm feeling that, like I know that I need to press in and give even more than I'm giving. And so that's always like a mechanism for me of like, is to give whenever I'm feeling like I don't have enough. And that puts me in the posture to realize like there's always more.
Yeah, we used to do this thing at the seminar, fist of greed. We'd put $5 in your hand and then, try to take it. Well, you can't. And then you give the $5 to you, and I say, get my fist of greed tight. Try to give me that $5. And if your hand's so closed and it's so tight, you can't actually receive either. So you might have that $5 secured, but you're never going to get 10. You're never going to get more because you're so tightly holding on to that five that you can't even receive. So definitely there's like a currency, right? It flows. There's an interesting uh I think it's I think it was in I can't remember where it came from, but it was saying something along the lines that currency flows like water towards opportunity. You'll never know where it's going, but you can kind of set up along the banks of opportunity. So it flows. You can't really control it like a river. When the
Yep.
water's flowing, you don't really know where it's going to go. But with a little research and mindfulness, maybe you can get ahead of the opportunity. You get a little bit better in the niche that you're in. But it's pretty much just like the currency of things. It has to
Yep.
flow. And if your hand's closed, that's not that the currency is not flowing like that. So
That's right.
um, what's the secret sauce? What's the unfair advantage when it comes to um, what you find easy and other people might find difficult to do?
I think being interested instead of being interesting. I think that's something that
Curiosity.
is very powerful, is being interested. This is something that I naturally do, that it took me years to realize that this is a thing. But when you are meeting somebody new or you're forming a relationship, when you're networking, and just be interested, just find out about the person, like genuinely be curious, ask them questions, find out about their family, find out about their hopes, find out about their dreams. A really powerful question, because a lot of times, and especially in the investing world, in the engagement, it feels very transactional, right? But
Mm,
when you said earlier something very powerful, that like that when we don't have any future, then we go back to the
yeah.
past. Like if you can help them think about their future and what their future looks like, that is wildly powerful, because most of the people, especially if they have money, most of the people
Hmm.
that they're engaging with are trying to take from them. If you can give them something by asking them really great questions and lead them in a place where they can just think and process and like that's just, but you do that by asking great questions, which means that you have to be interested in what they have to say and not so interested in what you want to sell them or what you can try to
Hmm.
provide to them. Is like just be interested in who they are, and like treat them like a human. And that is super powerful. It becomes really, really easy whenever you go to make an ask, because you've already made a deposit into that relationship bank.
Yeah, there's this it was a fact of some people find it hard to be curious, right? They're like, maybe they're not even interested. Maybe I'm telling you about my new purchase of like a snowblower or something, or something like a lawnmower. And you might be like, so what? Or whatever. But I tell people like the curiosity is like, be curious in a way that allows you to visualize what it is they're talking about. So say like, well, what color is it? What what make is it? Is it like new or old? And as you
Yep.
start to like piece that image of whatever they're talking together in curiosity, it actually continues the conversation into interest because you're focused and engaged, because it's easy to be like, oh, that's cool. I had a snowblower once and I start talking about my snowblower. And you don't
Yep.
want that. You're not interested in mine as much as I'm not interested in maybe yours. But if we can practice that curiosity, I like that, being curious, or be interested instead of interesting, that because
Yep.
they're how to win friends and influence people is constantly reiterating the idea that sadly, most people do not care about what you have to say. They really only care about two things: their name and what they're interested in. So if you can remember their name and you can tell, what they're interested in, Logan, all of a sudden your ears pick up. Oh, hey, Logan,
Yep.
how's it going, Logan? And really what you're interested in, then all of a sudden it's an interesting conversation for you.
Yep.
And
It
then
is.
that's a very great point. Um, so moving into multifamily and syndication is like probably probably one of the last tiers of investing. You know, the next thing's probably like development, and then funds, you know, and maybe becoming a pure syndicator where you're really not on the GP side, you're just in the capital side and you're connecting people with deals, and eventually you're not actually in a GP position. What does the future look like for where you are now and where you want this thing to go?
Yeah, that's a super great question, Bryce. And so I'm kind of in that stage right now. I've realized that, I've done enough deals that I don't really love operations. I'm good enough at it to get by, and I have a great couple partners and that help me with that stuff. But it is not really where my skill set or my gifting is at. I am really, really great at building the relationships, raising the capital. And so I'm really focusing on doing that. We have a couple operators that we have developed some relationships with that we are exclusively raising capital into their deals. So we are setting up a fund to funds, where we're raising into that fund to funds, and that fund is going into these different opportunities. So that's kind of where we're at now. Is I'm still buying a couple houses here and there, single family houses that are subject to, that are just really, really great that are in my local area. But
Mm-hmm.
predominantly, I am focused on raising capital into other people's syndication stuff that is far out. Like the couple operators that we're partnered with, like one of them has 1,600 units, and they've owned 6,000 at one point. And so they have far more experience in operating these assets than I do. And I can be leveraged for them on the capital raising side, and then they can be leveraged for me on the operations side. And I get to spend my time doing what I really enjoy doing, which is finding about people, connecting with new people, meeting them. And if what we're doing is a fit for them, inviting them to participate in deals with us.
Yeah, because it doesn't take long where you realize, you know, maybe like I used to flip properties. I do not like the operation side of flipping properties. It's akin to babysitting in sometimes depending on the crew,
Yep.
and it's also not my highest and best use. And one thing that I always remember is that if you're sitting in that seat, you're occupying it for someone who might actually love that position. They just love operations. They love spreadsheets and checking task lists off, and I'm just not that guy. So I always say, you know, what is it costing you to pretend to be that guy? What is it costing someone else for you to be occupying that job? Like the last thing you want to do is take opportunity from someone who actually wants that position. So knowing yourself, stepping into your highest and best use. You know, we used to have a do and do not list in the office. Do these things. If you find yourself doing these things, you're off base. So um, I think that comes with time. You know,
Yep.
how long did it take for you to figure out you weren't into operations?
About 6 years. Like
Yeah,
I kind of always knew it, but I wasn't in a place where I was mentally
like a
prepared to make
necessary
the shift.
evil. Yeah.
Yeah, yeah. It was like, you know, like we all do. If I knew what I knew now, I would have done it much sooner. But I also didn't. I also took for granted, and I think most people do this. I took for granted, and I didn't appreciate what I was good at. Right. So I undervalued what I was good at naturally because it came naturally to me. Right. So it's like I didn't realize that like people just raise capital. It was like I just thought it was a part of the deal, and this is a part of a transaction that I'm really good at. It's really easy for me. But here, other people are asking me what I'm doing. I'm like, what do you mean? Like, what am I doing? I'm like, I'm just talking to people and they give me money. Like, what are
Yeah.
you doing that they don't want to give you money?
Yeah.
So I took it for granted as well. So I didn't see it as an opportunity because it was too close to me, because it was just something I was naturally good at doing, which was really just the essence of that is being interested in building trust.
Hmm. Yeah, it's like that's why eventually I had to move back into like the acquisitions thing. I realized I don't like the like maintenance of the deal. I like the hunt and the close, and
Yep.
then and then someone else can love doing the deal. Like that's just not me. So knowing yourself and not, lying to yourself like, oh, I'm good at everything. Well, cool. Yeah, maybe on some level you're good at this, that, and the other, but let's be true about what's our highest and best use and just do that instead of
Yep,
trying to do all the positions on the court. Just shoot from where you score and find someone else to pass it to when it's not.
that's
So
right.
tell people a little bit. I mean, we obviously have to be a little bit careful about fund level stuff, but um, what sort of interesting things are you working on? And then we'll get into how people can connect with you and participate.
Yeah. So this is a 506c offering, so it's fine. First talk about a little bit, but I'll give you guys some highlights of one of the ones that we're working on right now. Obviously, interest rates are insane, and
Mm-hmm.
insurance is also a problem in a ton of markets. So we're seeing a lot in the multifamily space of just, you know, trouble making deals pencil out, and people that are running into issues where they've eaten up their capital for renovations on
Mm-hmm.
some of these nicer units even. And they need extra capital to finish out. They've already proven the rents because they've, renovated 70 or 80% already. They just need to finish the rest of those out. And they had to use that capital that they had originally raised for,
Bridge
insurance
loans,
premiums
capital,
or
yeah.
rate caps. Yeah. We're looking at we're partnering with a group right now that they're coming in and providing $3 to $5 million injections as they're actually mezzanine debt that can convert into preferred equity in the event of default. They're 6 to 12 month loans at about 16%. So coming in and it's rescue debt for, A plus assets and predominantly Texas and Florida.
Yeah,
So really,
like a
really great
bridge loan, like
assets.
finish the
Yeah.
job loan.
Yep.
Yeah,
Yep. And
very
it's
cool.
cheaper than doing a capital call if they could even get capital call. A lot of these have a lot of equity in them, but still it's cheaper to get the loan, even at 16%, without having to do the capital call and giving up that equity permanently. And if they don't perform, we have a mechanism in there where it'll convert to equity at a 25% discount. And then also we have the ability to have controlling rights of the property as well. So and the leads are coming from the lenders. So it's really, really safe. The lenders are looking at all the financials and we have all the data. So it's pretty slam dunk stuff. Not going to be, the 30% returns you saw in 2021, 22, but these are like super, super solid deals that are going to, be in that 15, 16 range through the
Mm-hmm.
course of the 5-year fund. So
Yeah, I mean, and it's like a necessary kind of thing that's happening right now in the industry because the interest rates have changed and people are mid refinance. They're not quite
yeah.
stabilized. And
Yep.
now things have changed drastically when you look at what they bought into and what they are today. When they go back to the bank and say, hey, I'm done. It's like, well, you're not quite done. And things that old offering is old and here's the new one. And they're like, okay, that changes the stack. So
Yeah.
definitely and I like too that it's coming from the lenders. It's not just the people operating, going around panhandling for the last, $1 million to finish it. It's the lender going, hey, we want our primary money back out. So
Yes.
we know that these next people that can come in safely because they've operated safely. They've just, things have changed. As opposed
Yes.
to, someone reaching out DMing you on LinkedIn saying, hey, do you have $1 million for me to finish my apartment block? A little bit
Yeah.
different, right?
Yeah. No, these are 50, 60, some $100 million buildings. Like these are not the, you know, breaking out syndicator that's doing, $2 to $4 million. Not that there's anything wrong with that, but these are A plus properties and, very, very, big metro areas. Like these are really, really nice units.
Nice, nice. So if people want to connect with you, they want to find out more about your journey and how to become involved in some of the stuff you're doing, what should they do? How do they find you?
Yeah, I'll give you two. So one, we have a podcast called Strategic Stewardship, where we talk about a lot of this stuff and get into details of, some market updates and stuff like that. So if you want to just, go consume more content, hear about how we talk about things, how we view things, kind of our opinion on investments, that would be the place. And if you'd like to connect with us. REIstewardship.com is the website. So REIstewardship.com.
And the podcasts on iTunes, Spotify, YouTube.
Yep. All the
Okay, cool.
places.
Awesome. Well, I really appreciate you stopping by and kind of letting people know a little bit more about your journey. I think it'll help people along that line who are, it's a very, it's not like a conventional story. It's a fairly, repeated story, but we all end up in a different position. But I like some of the things you said about how you got here and what guided you to get there. So I really appreciate your time.
Yeah, absolutely. Thank you for having me.
No problem. Until next time, guys, we'll catch you on the next episode.
Hey there, I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewyou.com. Now at moneypartnerformula.com, we help real estate investors to create a process for predictably getting capital so they can do more deals without relying on hard money lenders or the banks. We do this by building them a private capital marketing system. Now, if you want help turning yourself into a big money capital attraction machine, then book a call with our team to see how we can help. Just visit moneypartnerformula.com to find out more. All right, take care, and we'll see you on the next interview.